certainly a whole lot to talk about, as you alluded to. But, one thing I do want to talk about before we start is really what phenomenal growth we had in 2021. I went back and looked at some numbers, and from the third quarter of 2020 to the second quarter of 2021, GDP rose by 17%. I mean, that is just absolutely stunning. Now, we were down 9%, but growth has been pretty good. And what's happening now as we start 2022, there's all of these gray clouds that are forming, and that's really what's caused the volatility.
That's absolutely true, Dave. I mean, one of the things I always think about is the stock market sort of as a leading indicator. So last year, we were up almost 28% in the S&P 500. That anticipated a lot of the growth that we've seen, even the growth we're likely to see in the coming few months. So what we're trying to figure out as investors is what's going to happen with rates, what's going to happen with the shape of the yield curve, and how will the economy weather higher interest rates.
And so we talk about higher interest rates and inflation, and sure that some folks don't want to hear it anymore because we all know inflation is here. If you go to the grocery store, if you fill up your gas tank, heating or cooling your home, you know that it's more expensive. And so inflation is there. One of the things that is befuddling to us is the fact that there has been so much fiscal and monetary stimulus that was put in, $1.9 trillion of fiscal stimulus. We know that there was a bipartisan infrastructure bill that's passed, and that was $1.2 trillion. So that is coming, as well as the Fed continues to put money into the market before they end up their tapering.
Oh, yeah. One of the things I've been looking at, one of the key tells for me is how the yield curve trading and what's the high yield market doing, in other words, junk bonds, because typically if there was real fear of the economy rolling over, we'd see spreads start to widen. So they've stayed relatively well behaved. What we're really seeing is just a huge rotation out of those big tech names, the big top 10 names in the S&P 500 and Russell 1000 growth towards smaller companies like in the energy patch or community banks and things of that nature. And that doesn't help much in terms of market cap, but it certainly can lead to stock selection and stock picking that warrant a more tactical approach.
And so you talk about where you can go. I mean, it certainly feels to us that we are nearing an oversold or a washed out part of the market. And we're watching this closely. Obviously, we had a lot of red throughout the week. And you look at the 10-year Treasury, as we're starting to talk about, Derek, and back down, which is interesting as Ukraine is fretting Russia coming over the border. The 10-year Treasury went down, which is very interesting to us.
Right. I hear the talking heads on TV talk about higher interest rates, and I've watched interest rates move lower. So they're trying to justify market action by basically choosing whatever they choose to select. We're going to see how earnings are. And again, companies that make money, that trade at reasonable free cash flow yields, potentially pay dividends, those are the types of stocks that investors are starting to gravitate towards.
And you look at it and say, Derek, where can I go? The NASDAQ from peak to where it is now is down 14% peak to trough. So clearly in correction territory that most observers use is more than 10% is correction, more than 20% is a bear market. So it's right in between there trying to find a bottom. So we start looking at NASDAQ names, and those are some of the names that you're talking about, Derek.
One of the other things I look at is the fear index, the VIX, and basically that thing is up about 50% from its low of 2 weeks ago. And that typically is a sign of an excessive sell-off. And it's aggravated by the fact that options expired on Friday, which aggravated the sell-off.
Yeah, that's right. And that's why we're going to watch earnings reports that are really going to come out next week. So if there's a favorite company, look for their earnings reports and find out if they had higher revenue growth, obviously sales, or higher net income, because the markets will reward those companies that have those characteristics.
And who raise guidance.